Good day. Welcome to another episode of Analyst Insights, your plug for anything investments, economics, and finance. I'm your host, Rufaro, and I'm joined by my colleague, Ranga. We'll start off looking at some of the corporate action that we saw last week with Econet announcing that they were going to be buying back their debentures differently. What's your view on the way they have structured this corporate action?
Thanks, Rufaro, and thanks for having me. So the early redemption, according to the circular from the company, was meant to give the company an opportunity to reduce its foreign currency obligation. So you remember that sometime around 2017, Econet had a transaction where they had a rights offer to their shareholders. And in addition to the rights offer, there was a linked debenture instrument that was there, that was accompanying the rights offer. And at that point, they were raising these funds because they wanted to, they were facing, just like any company, the problems of dwindling foreign currency resources, and also maybe failure to pay creditors on time. So it made sense for them to be raising foreign currency for that purposes. Now, with the rights offer, it's not a problem because that's a share issue, so they don't have to pay back their shareholders. But this is actually the linked debenture instrument has left them with a significant foreign currency obligation, around 70 million or thereabout, after including the interest and all. And now the company is saying they want to pay that early because it was now becoming a big financial burden on their part. And given the fact that the local currency has been losing value, and the fact that it's becoming even more difficult for them to be getting US dollars for them to pay this obligation. So from the company's point of view, it made sense for them to reduce this exposure, pay early, and in a way, the way it's structured is such that for the debenture holders who would elect to be paid early, it's going to be done over different time frames, so that the cash flows are paid in a sort of over a long period of time to smoothen the cash flows on the company. So it's going to reduce the financial burden on Econet, and also it gives them time to plan their cash flows. And I think when you looked at their numbers recently, there was a huge financial loss attributable to the exchange losses. So this was just meant to make sure that they deal with that. To the debenture holders, obviously it's I think debenture holders were happy to hold debentures in US dollars. This is a US dollar asset that was paying them an interest rate that was quite handsome. Now you got a scenario where they have to be repaid, and the payments are going to be made in local currency at interbank, and we all know that the interbank rate is nowhere close to where the market rate is. So in interbank around 85, market rate around 140, so set almost 50%. So it doesn't, that may not be taken as positive from the point of view of the debenture holders who are now having to be paid in Zim dollars. But the company was just trying to look after itself. It also, maybe there's need to strike a balance between reducing that financial obligation and also making sure that the debenture holders are not prejudiced, because they invested in this instrument in good faith, and hopefully they'll be able to get good value as the early redemption kicks in.
So from a debenture holder's perspective, if an investor in the debenture is unhappy with this particular arrangement, do they have any options, or this corporate action really is well within the rights of the company in terms of the initial issue of the debenture? This is the risk that the regulatory framework would change, or that the economic environment would change, and that they would be paid through formal channels in local currency is something that they took on when they bought the debenture, and it's par for the course. How do you see things from a debenture holder's perspective?
So it was part of the agreement. Early redemption was part of the conditions that were in that document when the first transaction was done. So it's more like investing in a callable instrument. Usually, issuers don't call an instrument if it's not favorable on their part. And in most cases, when an instrument is called, it may not be favorable on the part of the holders of the instrument. What are we saying is even this early redemption is more attractive from the company side because it helps them to reduce this financial obligation. It certainly may not be that attractive to the debenture holders because you were planning to be holding this instrument, say, for the next 6 years because it was a 6-year instrument issued in 2017. So now you are facing a scenario where you have to be, it has to be redeemed early, and the redemption process is going to be done using local currency at interbank rate. Somehow it's different from maybe holding it to maturity and maybe possibly being paid in US dollars at the end of the day. But maybe the other way to look at it is what if you hold it to maturity and at that point the interbank rate remains stuck where it is and you are still paid in interbank, and maybe at that point the gap between the the interbank rate and the para market rate will be much bigger than where it is right now. There is also that risk. The exchange rate risk was always going to be there, given how the foreign currency situation has been developing in this country.
Yeah, I suppose another perspective is the Econet shareholder. If you are a shareholder in the company, it would be irresponsible for the company not to take advantage of the current scenario to actually exercise their right to redeem these shares earlier. So it's accretive to the Econet shareholder, not so much to the debenture shareholder, but everybody took bets when these debentures were issued, and it seems like things have turned out better for the Econet shareholder. So from a shareholder's perspective, I think they would find the company's action commendable and accretive to the company and its equity holders. The debenture holders took a view, and unfortunately for them, it's not going to quite work out the way they would have hoped. Moving on from the Econet debenture corporate action, we saw Delta's release its trading update. What do you make of those numbers, and what does it say for the outlook for the business? And because Delta is a company whose performance is a proxy for the consumer demand, aggregate consumer demand in the economy, and the performance of the economy at large, what signals do you see from this update?
So the numbers from Delta are showing a very significant growth in the volumes across the board. So they were showing volumes growth above 100% for most of the lines. Rather, it was actually 139% growth compared to Q1. And this is coming despite supply disruptions as a result of planned maintenance utility outages. But I think it was expected because the comparable period was affected heavily by lockdown. So the Q2 for them was a better period where they were able to trade for longer hours and over a longer period of time. And I think they are also were benefiting from competitive pricing, consistent supply of the product in key markets, and also the injection of the new returnable glass, which tends to be the major driver of volumes in most of the lines. And it just I think it's a feature of what we have seen recently, where most of these businesses are seeing some growth in volumes because the comparable period actually were low basis, since they were mostly at the peak of lockdowns. And I think obviously the first lockdown was a hard one, but over time we've seen things opening up a little bit. And in terms of the outlook, it's again the COVID pandemic will still have an impact, in the sense that whenever you've got lockdown, it's affecting the volumes that are being sold. The key markets are closed right now. Restaurants, limited time frame, beer halls, pubs, and nightclubs, they are not operating, so it sort of affects the some activity. But I think one key feature for this year has been the good agriculture season and what it has done to the rural folks. Most of them, we saw the tobacco selling season coming to an end, so most of those folks would have money, and also the grain sales to the GMB. So you'd expect maybe sales of the sorghum beer or entry-level lager beers to be up, especially in the rural communities, although mostly in the urban areas, which tends to, the channels are pretty much closed. I think in the rural areas, accessibility is probably much better than in the urban areas.
Okay. The other development was there was a TB issuance by the central bank in the week under review, and this was oversubscribed. Why do you think there was this interest in government paper, particularly given that the returns in real terms are negative? What do you attribute the interest to?
Yeah, look, it's actually quite surprising that in this environment we still have got these TB issuances, because I mean the returns have been largely sub-inflationary and not good. But it also is a function of the regulatory environment, where as an alternative or in place as part of the regulation, you have got the non-negotiable certificate of deposits, which is basically an instrument that will sweep away what is seen as excess deposit for the banks. And the problem with that is that instrument, banks cannot trade it with counterparties. So given that scenario, most of them are forced to even invest in TBs, because at least with TBs you are getting a decent return. I think the return must have been around 19% or thereabout. And this is a paper that you can be trading to try and manage your liquidity position. So I think it was more forced by circumstances where if you don't, you have got a high risk of being allocated non-negotiable certificate of deposits, and you'll be stuck with that paper, zero interest, and you can't be able to trade it with counterparties and with the TBs. But it doesn't take away the fact that at the current moment, it doesn't really, the returns are not there. And if someone was to invest purely on in seeking for a good return, that paper is not giving you the best, but that is what is there, and banks will have to deal with that.
Okay, fantastic. As we wind up the show, we've got the midterm fiscal policy review coming up. Any exciting changes that you expect? And what would you do differently if you were sitting in the hot seat?
Yeah, so I think this is actually also coming on the back of current reports showing that Zimra has collected more. So it looks like on revenue side, the government is doing more in terms of being able to collect against their targets. Certainly on the expenditure side, we have generally seen them being trying to manage the expenses. We have seen recently that the civil servant salaries have been adjusted by 50%, and that number is certainly not anywhere close to what they were expecting and the level of inflation development. So I think there has been some attempt, but I think we still need to see more commitments in terms of capital projects to deal with the huge infrastructure backlog that is there. So be it in on the roads, the water reticulation, and other areas. I think we have seen a bit of movement with a number of projects like the Guaishangan Dam going ahead, and also some bit of movement that's been taking place with the Bedbridge Chirundi Road. But I think there's still a long way. One expects that we don't see more taxation, because this market or the economy is already overtaxed. I think what's critical is to have policies that are supporting of production. We need to have more production so that the revenue comes from a bigger base, as opposed to overtaxing the economy to try and raising the revenue, and also make sure that the allocation to the capital project is sufficient enough for us to give us a base from which we can have sustainable growth. Certainly, also even on the monetary front, I think it's important to deal with other issues there, whether it's inflation. I think inflation targeting has been one of the instruments that they've been using. In particular, this whole issue about reserve currency, to try and make sure that money supply growth is kept in check. So there are a whole lot of expectation, especially on the expenditure side, where there's so much demand from mostly civil servants for higher salaries, and that has to be matched with what's being collected as revenue.
Thank you so much for that, Ranga. We've come to the end of another show. Thank you for tuning in. Please feel free to share with us your thoughts, comments, and suggestions. Until the next episode, good day.